win-win situation for everybody, where everybody, where we can see a clear path to a sustainable economy where everybody has kind of everything what they need, and I believe that we're closer than ever before to even solving world hunger.
Welcome everyone back to another episode of Inside the Markets presented by StockPulse.com. I'm your host, Justin O'Connell, and we are more than honored to be sitting down with CEO and founder of Quantum Economics, Mati Greenspan. Thank you so much for joining us today, Mati.
Thanks a lot for having me.
So what news are you keeping an eye on now in the crypto markets, particularly as it relates to Bitcoin and Ethereum?
It's an extremely exciting time to be in the crypto market right now. It seems like everybody and their brother is headed that way. I mean, just today we saw Joe Rogan accepting Bitcoin payments, and Quentin Tarantino auctioning off some of his original manuscripts for Pulp Fiction as NFTs on the Ethereum network, which I thought was particularly exciting. Bank of America says that they're very open to someday using Bitcoin or offering Bitcoin collateralized loans, which basically they're trying to rush in front of the DeFi market, which is already there. We've got now a Bitcoin ETF in the United States, and overall, I would say there's just an overload of good news for these type of markets. Facebook's rebranding to Meta. This is something my team and I have been on top of the metaverse for months already. Our head crypto analyst, Luke Kerner, basically had an entire series called Assets of the Metaverse, where he was interviewing some of the top builders in metaverse space. And of course, Sandbox and Decentraland were the top of our list of projects that we were getting involved with. And by getting involved with, I mean buying their tokens, obviously. And since the announcement, Facebook's announcement, they've just been shooting to the moon. So we're quite happy taking a victory lap there. It's huge. It's huge.
Adding to the news, incoming New York Mayor Eric Adams vows to take his first 3 paychecks in Bitcoin. There's more. Burger King, Robinhood serving up a side of crypto with Bitcoin, Dogecoin, Ethereum giveaway.
Yeah,
from Fox Business.
McDonald's too is doing an NFT giveaway for their McRibs.
The New York Times wrote 3 days ago, banks tried to kill crypto and failed. Now they're embracing it slowly.
Mm.
And then there's all sorts of price targets heading into the end of Q4. There's been predictions as high as 220K, I've heard, probably higher, for the end of 2021.
Pick a number, man.
Tell us what you're thinking. Where do you think these prices could head over here in Q4?
Yeah, I've never been very good at telling the future, Justin. Honestly, I don't, everybody kind of expects Bitcoin to blow the roof and keep going. I'm a bit more reserved. I think that it's a possibility. I don't think that it's the most likely outcome just because everybody expects it to. I think that we've had a lot of speculation that leads us to the point, and now we're testing the high levels. Traders in general, investors tend to buy low and sell high. So if you think about the fact that we're just sitting near the all-time highs at the moment, that tends to add to selling pressure rather than buying pressure. But we've seen Bitcoin kind of defunk that type of dynamic several times in the past, where it broke an all-time high and then just kept on going. But I think that for long-term investors, it doesn't really matter all that much. The idea is to dollar cost average and diversify your portfolio. Continue looking for relatively new and undiscovered gems, that's where we make our most money.
En route to discovering these gems, I'm curious, what are some of the things you look at first and foremost?
Yeah, so the first place almost always I look at is Lunar Crush. As you know, I'm an advisor on lunarcrush.com, which is a social listening site for cryptocurrencies. They aggregate data on all of the different coins, and they listen across, Twitter, LinkedIn, Reddit, Medium, and even mainstream media to see which, how, if you think about cryptocurrencies as a network, right? They kind of give you a good measure of the size of the network, and that really helps to evaluate them.
This network effect is one of the most fascinating arenas in crypto economics, I guess they're called, and the way in which tokens evolve. I think they're also some of the most difficult to achieve as well, the network effect. So the growing of community. There's been all sorts of different techniques that are used to grow these communities. During the ICO craze, there was something that had cropped up called bounty hunting, in which people were able to share social posts, retweet, as well as create content in order to earn tokens. And I think we've seen this evolve along the lines of the labor to earn, play to earn phenomenon that's cropping up, as it particularly, I think, is going to end up relating to NFTs and sort of in-game token items, et cetera. So on the topic of network effect, I think one of the stories of network effect that we saw in 2021 was the story of Elon Musk inheriting the network effect and amplifying the network effect of Dogecoin. We saw Dogecoin go from under 1 cent to approximately 70 cents in a very short order, and peaking with Elon going on SNL and just merely mentioning Dogecoin and also explaining some other facets of crypto. So I'm curious, could you speak further to how projects achieve network effect? And then what do you make of Elon Musk's, as some say, joke, and perhaps others suggest more strategic move as it relates to Dogecoin?
Yeah, I mean, the network effect is extremely difficult issue to solve. And it's basically the chicken and the egg, right? Whenever you're creating a marketplace. And this is really, as a former exec at eToro, I mean, this is really where my analysis comes in. This is where most of our clients are looking for, is kind of how do you build that, the initial, because you can't have a website with, with only buyers or only sellers. You have to actually have both. And if somebody comes in, you want to onboard a customer, and you want to onboard them as a buyer, and there's nobody selling, then they're not going to stay for very long. And if you want to onboard the sellers, and there's nobody buying, so I think that there have been various tactics throughout this sort of world of growth hacking. I think that Airbnb and Uber did exceptional jobs at this. Oftentimes companies will run at a loss. I've seen companies, give out free money. For example, sign up, we'll give you $10, $20, $50, whatever they think their target audience is. And this has happened even before cryptocurrencies. But when we think about cryptocurrencies, I mean, this is the epitome of wealth generation from nothing. And for cryptocurrencies, it's a lot easier to do that, where we see, I don't know if you're familiar with Axie Infinity, which is basically a play to earn game that people are making money in developing economies, just playing a video game. And, people are able to earn a full-time wage, in just 30 hours, a month, playing a video game. So I think that we're, as a society, as a species at large, our technology has progressed sufficiently that we don't need to, go out and hunt anymore. We don't necessarily, not everybody needs to be a farmer. right? We have robots who largely do that work for us in these big machines. And now people can kind of sit back and enjoy the fruit of that labor. And I think that universal basic income is one idea where we see governments kind of handling the distribution of wealth on behalf of their populations, but governments are extremely bad at this because they tend to side with the ultra wealthy, and the ultra wealthy, they tend to have good lobbyists who are pulling the strings of the politicians, and it's very difficult for anyone to kind of legislate that into being. So what I think that the crypto world is trying to do here is something quite unique, where rather than letting the government take care of it, we can actually create wealth and pay people to join a network, or play a video game, for example, and people can sustain themselves through that method, and it's kind of a win-win situation for everybody, where everybody where we can see a clear path to a sustainable economy where everybody has kind of everything they need. And I believe that we're closer than ever before to even solving world hunger.
You're listening to StockPulse.com's Inside the Markets. We're sitting down with Mati Greenspan, the CEO and founder of QuantumEconomics.com. Thanks so much for joining us again, Mati. So that's quite a thesis for where crypto could be heading. And before we get a little bit deeper into that, I did want to bring it back to Dogecoin.
Sure.
What do you think about what happened in 2021 with Dogecoin and Elon, and what are the implications for that coin long term?
Yeah, so my first interaction with Dogecoin was exactly as we just described. It was in 2014, and somebody just posted on Twitter, said, first 10 people who post me a Dogecoin wallet address, I'm going to give them 1,000 Dogecoins. Okay, 1,000 Dogecoins were worth absolutely nothing at the time, but I said, why not? That sounds like fun. I did end up losing that wallet, unfortunately, but still, even with the price surge, 1,000 Dogecoins isn't all that much. But I would say that what we see here is, and let's get straight. Dogecoin was created as a joke, and the creators themselves, even after Elon Musk got involved, are still today, to this day, bashing the project. Some of the creators, anyways. And when they were creating it, they really did it to say, okay, we're going to create something that has no chance of survival, and we're going to create a huge, ridiculous supply of these coins. So therefore, like where we know Bitcoin has a very limited, finite supply of 21 million coins that will ever be created. So we know that there's something called digital scarcity. Say, well, we don't have digital scarcity anymore. Now we have digital plentifulness, or whatever you want to call it. And even with that, we can see that when a network grows at that rate, there isn't, it's not that all of the coins that are out there are available for purchase on the market at the moment. So when we think about it, and what basically ended up happening is that there weren't all that many Dogecoins that were sitting there waiting to be bought by other people. So when you had so many people coming in to try and buy them, and they weren't sitting there in the market, there wasn't liquidity in the market, that ended up pushing the price up astronomically. I think that the Elon Musk effect in general wears off over time. We originally saw this. My first encounter with this wasn't actually Elon Musk. It was with Warren Buffett, when he was, right after the great financial crisis, buying up stocks. And then every time he announced that he was buying a stock, the rest of the world would buy it too, because they wanted to be like Warren Buffett, and they wanted to kind of copy what he was doing. And at the time, the first one was Bank of America, and he announced that he bought Bank of America, and it was it seemed to be a surprise to Warren Buffett, right? That he was able to have this much impact on the market. And over time, he tried to replicate that. And then by the fourth or fifth time that he announced the stock that he just bought, the market didn't care anymore. Like this kind of, and we saw that with Elon. The market discounts these type of things, and we saw that with Elon Musk as well. When the first time he tweeted about Dogecoin, we saw this huge, massive spike. The second time, not so much of a spike. And now, whenever he tweets about Dogecoin, we kind of expect it. We know that Elon Musk is on board, so there isn't really any kind of news happening over here. But I think that, for example, when sports teams or movie theaters start to announce that they're accepting cryptocurrencies, Dogecoin, or things like that, that makes them, in the eyes of the people and in reality, more and more indiscernible from everyday money that you'd use, like US dollars or other fiat government-backed currencies. And I think that that's extremely exciting. But also it makes it very difficult for speculators, because we immediately saw, or not immediately, but in a very short order, we saw these kind of copycats coming in. Okay, you like that Dogecoin jokes? I got a better one for you. It's called Shiba Inu, and it's the dog that was that Dogecoin was created about. And then Elon Musk posts a picture of his dog, and his dog is a Shiba Inu, and his name is Floki. And now we have Floki Coin, and and then Coinbase says, oh, we've got this dog, his name is DeFido, and then they're like, okay, cool, we have Fido Coin, and now we see like dozens of new coins coming online every day, and some of them actually are performing not so bad. For example, we saw Shiba Inu quite famously last week, rising to it with astronomical speed. And the question is, millionaires have been made, and hundreds of millionaires have been made, and even several billionaires have been made from Shiba Inu, if they were smart enough to cash out. We're just coming back on a retreat. This type of hype certainly is not sustainable. I think that the challenge for those type of new cryptocurrencies is then to try and establish a network effect and to retain not the value, but actually the manpower behind it, right? Dogecoin was always about memes. It was always about the joke. It was always about something where people were contributing to the network. People were contributing memes, which are basically an online joke. And they were contributing their man hours into the network. And that man hour has value itself. Shiba Inu, actually, I think that they were able to establish themselves in quite a fast way. It's, in my mind, the fastest growing economic infrastructure in the history of the world, where they immediately gang together on channels like Discord and Telegram, and they got some programmers involved who built decentralized exchange on top of the Shiba Inu coin. Shiba Inu, we know, is actually built on Ethereum. So now they're looking to build out their own blockchain, so have a native Shiba blockchain, and have all this. And now they're trying to build the functionality in order to justify the high valuation. We saw, on the other hand, a coin called Squid Game, which went to a market cap of $2 trillion before suddenly crashing, because that actually has no utility whatsoever, and it's just pure hype. So pure hype, we know, can bring a large amount of force majeure into a specific place or project. But the hype itself cannot sustain the value. The value has to be sustained through utility. And that, I think, is where we're going, rather than a kind of musical chairs economy where we're constantly having to go to take money from Dogecoin to SHIB to Floki to Fido, and then who knows what's next.
So Squid Game is based on a television series, I believe, if I am correct.
Yeah. Squid Games is Netflix #1 hit series to date. And basically basically somebody just created a coin with the same name, no utility, no backing. It's just they were trying to capture that hype, and they ended up capturing it. And apparently, the coin was designed so poorly that people weren't really able to cash out. And that's just a flaw, obviously, in the economics of the project. But more than that, there never really was any kind of basis of what this coin is intended to do, right? And that's really what I'm trying to get at, is the utility effect of the coin. And if there isn't any utility and it's just hype, it can grow very far, very fast, because hype is a very powerful mechanism, but it doesn't retain value.
I wonder if, as he's tweeted, Elon Musk has any plans for bringing utility value to the Dogecoin network. As I mentioned, he inherited the network effect, if not expanded upon it. And he has cozied up to the developers at Dogecoin now, which you're absolutely right. It was started as a joke, has an infinite token supply as well, which is much different juxtaposed to at least Bitcoin, although not so different when juxtaposed to Ethereum. And he's mentioned that they've explored sort of the development path that Shiba Inu seems to be tracing. What do you make of that?
So I think that, first of all, there's a well-known saying in Silicon Valley, is that you don't bet against Elon Musk. Honestly, those who have tried have failed and lost lots of money in the process. So we don't bet against him. I hold a fair amount of Dogecoin. I don't hold any SHIB or Floki at the moment. It's not my cup of tea. Since Elon Musk got in, I decided that it was worth upping my 1,000 lost coins and putting something a bit more substantial into it. But it's obviously not my largest holding, because it's not the project that I see as Bitcoin, where that's the original cryptocurrency and has the most liquidity and the largest network by far. So everybody will have their own opinion, and some people will like Dogecoin, some people won't like Dogecoin. I think that Dogecoin actually lost a lot of their members and their community, especially the ones who are looking to get rich quick, to some of the newer meme tokens, and it's a bit of a shame, I think. But if you think about it, Bitcoin also lost a lot of their hardcore following to Dogecoin or some of the other newer coins. I suppose that's kind of the cycle of life, really. If Elon Musk is able to build out more utility, that's great. But I think that what's really needed are user-friendly wallets, where people can actually kind of buy and hold Dogecoin and spend it. This is the most important, is to make it into money. So AMC accepting Dogecoin, sports teams, for example, accepting Dogecoin. We've seen even retail, PacSun, they've got 400 locations across the United States. Every single one of those that starts to accept a cryptocurrency gives it, in essence, validation and utility, and that it makes it more likely that somebody's going to hold a cryptocurrency if it's not just about having the investment, but having the investment and you can use it whenever you need to buy yourself something.
NFTs as an investment vehicle. Now, there's numerous types of NFTs that are developing. There's the art-based NFTs, of which there's lots of debate. Is the art on-chain? Is it off-chain? What's the real value on that front? But we have seen mainstream culture adopt NFTs, and perhaps NFTs, although it's a technical term, is one of the most recognizable concepts since Bitcoin. And then there's also functional NFTs as well. So these NFTs, which are going to like farm or gain value in some way, shape, or form, function as a wallet, as in the case of Aavegotchi, which is just one project, I'm sure, that's working on this sort of functional NFT front. And then the opportunities that are there for the taking in NFTs right now on multiple fronts. So interestingly, like back in the days of Bitcoin, you're able to get Bitcoins through faucets. As you mentioned, Dogecoins, people will just send to you. And then now NFTs, for instance, I saw the CEO of Blockstack or now Stacks, Munib Ali, I believe, he shared a link to a Bitcoin-based NFT on the Stacks blockchain, of which there would only be 1,000. And all you needed was knowledge of Web3 and MetaMask, et cetera, $35 for the transaction fee. And you could have one of these 1,000 NFTs on the Bitcoin blockchain, or at least a layer thereof. And I found that to be very reminiscent of the earlier days of Bitcoin and these other technologies, which today no such opportunities exist. So I'm curious, whether it be art-based or functional NFTs based, what are your thoughts of NFTs as an investment vehicle?
Yeah, so I think that the Stacks offering there, I think that's a bit of growth hacking on their part, right? They're trying to grow their network and their utility. I'm very fascinated by NFTs as far as the potential, the transformative potential in the future. I'm not extremely impressed with all of the various NFT communities that have popped up. I think that, first of all, community is utility. I haven't for myself found them to be an extremely viable investment vehicle. And the reason is I have trouble wrapping my head around the value proposition, for example, of, a pixelated JPEG image. Now, that's not to say they don't have value. It's not to say they won't rise in value. Certainly, had I been a little bit more attuned to the market, I might have, bought CryptoPunks when I first, a few CryptoPunks when I first heard of them, and would have been a lot more wealthy than I am now. But it's very difficult to place a value on something that's not liquid, right? When you have a liquid currency like Bitcoin or Ethereum or any other token, really, the market really has a large order book for supply and a large order book for demand. And there's that price discovery that goes into it. And that is where I think the magic happens. With a lot of the NFTs, where you don't have, for specific items, it goes as high as what the top bidder is willing to pay for it. But there's no price discovery as far as the illiquid part of the market. So what does the average casual investor think about this? He doesn't get a say. He doesn't actually get to participate in that market. And therefore, you're dealing with an extremely illiquid market, which is difficult to put a value on. So, for example, I have an NFT wallet, which is mostly just NFTs that people created of me, of like events that I participated in, and they wanted to, make a memento of the speakers or stuff like that. One guy called Block Fame did a really cool artwork of me as Heisenberg from Breaking Bad, which I thought was really nice art. So I purchased that one. The only other NFT that I have is a stoner cat, which is basically a project that is pioneered by Ashton Kutcher, Mia Kunis, Seth MacFarlane, and Chris Rock, and even Vitalik Buterin, the founder of Ethereum, is involved doing basically what they did is something I felt was unique, where they created a show about stoner cats, which is like an animated series, and only people who hold an NFT of those cats are able to watch the show, meaning if you don't get a ticket, you don't belong in the show. And that's what compelled me to buy, because I actually just wanted to see the cartoon. And even though it was, overpriced for what I would ever pay for a cartoon, I figured that there will be resale value, because there's only 10,000 of them ever minted. And there's going to be more than 10,000 people who actually want to watch this show with all of these big names involved. But something like, I don't know, Crypto Lions, for example, the Lazy Lions, which is a huge project. It's one of the biggest projects on Discord. And I've had long conversations with them, and I love their community. They've got really good vibes, which, you know, is almost rare within the crypto community, which can be quite tribal. But to buy a Lazy Lion is like minimum 1.5 Ethereum. It's like $6,000. Now I can afford it, but I can't justify it. Like, why would I pay $6,000 on a JPEG? And I tried to think, what will it be worth in 5 years from now, or 10 years from now? And I have no idea. Either the community could completely disappear overnight or over time, but it also could, you know, explode. And I have no way of gauging what's going to happen with that community, and therefore I can't justify it as an investment.
You're a very well-known social trader dating back to your days at eToro as an executive. Can you kind of take people through what social trading is?
Sure. So I still have an account at eToro. It was when I left eToro in 2019. It was actually one of the first things I did was just open an account there. Copy trading is a unique phenomenon, certainly before cryptocurrencies. Was pioneered by eToro, where a person can trade on the public markets, and then people can piggyback on top of their trade. So you could say allocate, you know, $10,000 onto one trader, and that $10,000 mirrors that trader's portfolio. Actually, not doing too bad. I made 100% returns in 2020, and so far this year, on pace to do the same. So, you know, that's certainly better than any kind of you know, hedge fund on Wall Street is able to do, and that's in large part thanks to some of the awesome moves that we've seen in the cryptocurrency market.
I'm curious, what do people need to know if they want to start copy trading? And then is it a strategy, or is it merely just a strategy amongst strategies one might embark upon? What are your thoughts?
Yeah, I think that in general, copy trading is an excellent place for beginners. It's kind of like a training wheels, right? Because you don't have to know everything about all of the companies or cryptocurrencies you're holding. You just kind of let the trader do that for you, and you just decide, is that somebody that fits within, you know, you can see their risk profile. You know, if every trader is categorized on a risk score of 1 to 10, and then you can see their past performance. So you say, okay, they've been performing well and they're relatively low risk, and you can allocate, or you could just, like, you know, if you like their personality, you can allocate money to them, and then you can watch what they're doing. And watching is obviously an excellent way to learn, especially when you're watching your own money. You feel quite a lot more attached than it would be, you know, watching a stranger do something like that. So I feel like it's an incredible, and you know, statistically, people who are new in the market are much better off doing something like that than, you know, just going to the wolves and trying to do it themselves without any kind of knowledge or experience, where we see a much higher fail rate of people who come in the market without any experience and try to do something, and they just, you know, it can be very difficult at times.
Just a reminder, you're listening to StockPulse.com's Inside the Market. We're sitting down with Mati Greenspan, CEO and founder of Quantum Economics. Mati, so I'm curious, you mentioned DeFi earlier, or sort of this concept of what the broader crypto markets and projects are trying to do. And so I think that the way I've seen it explained by people such as Patrick Byrne, for example, is that crypto in general and DeFi are working on a alternative tech stack to the centralized system that's there, such as in the UBI example you mentioned earlier, for when things get really bad in the centralized systems. And there's increasing amounts of centralizing forces being put on, I guess, society in general. And the idea is to get a tech stack built up that's decentralized, that offers all sorts of opportunities for people of all different backgrounds on a Web3 kind of platform, ideally in a perfect world on some sort of decentralized type of internet. So do you agree? And what are your thoughts on that? And can you talk about also some of the fruits we've seen of this labor on the DeFi front in particular, whether that be yield farming or lending protocols that are decentralized, or even just the stable coins? It seems there's one thing right after another. The stable coins dating back, particularly the decentralized ones, such as the makers in the world. Tell us about this whole new world that's called DeFi presently.
So I'll tell you about the old world first, which is the way that people tend to, asset managers today tend to look at investments, which is they feel that the safest place for their money is to lend it to the government. So they go out and they buy these things called bonds, which basically today is like taking your money and burying it in the backyard. It's not going to do you any good there. Right now in the bond market, depending on which bonds you're targeting, for example, you might get 1% or even 2% annually. Whereas we know the rate of inflation right now is somewhere near 4 or 5%, according to what they're reporting, and real inflation could be even as high as 10%. So if you're making 1 or 2% in yield on your money, you're in essence throwing it in the trash, or it's melting like an ice cube. So there's a lot of reasons for this, and the number one reason is kind of manipulation from the central banks, who've been graciously keeping the interest rates at or near zero, in some cases below zero, mostly for the last 10, 12 years since the financial crisis. And this has created a very bad situation for governments and their debt, because they're not providing any incentive for people to lend them money, other than that it's the safest place. And if we follow that to the most logical conclusion, it's not going to be the safest place, because it's not providing any incentive. And therefore, people are looking for alternatives. And a marvelous alternative has propped up within the cryptocurrency market, but is still largely under construction. I wouldn't say that somebody who's managing billions of dollars in a hedge fund is going to pull their money out of the bond market and stick it into the DeFi market, because it's extremely risky. But the way it works, in short, is you have something called it's not about Bitcoin or Ethereum. I mean, these are assets. These can be assets of speculation, which are highly volatile. And for the risk-averse crowd, it doesn't do it, right? Like, you can't take money off of an extremely stable investment and put it into something that can, fall 40% in a single day, right? That doesn't compute. Which is largely why the governments, as you mentioned earlier, that they've kind of, and the banking sector in general, have retreated from the Bitcoin hill. We've won the battle. This was the biggest battle of the war on cryptocurrencies, is the Bitcoin battle. And we've come a long way. 10 years ago, people were put in prison just for touching Bitcoin. And now it's traded at the highest levels on Wall Street and the big banks. So we've won that battle. But now the regulators are turning towards stable coins, which stable coins, basically what they are is a digital currency, which is pegged to a fiat currency. So you have Tether, for example, and one USDT coin is worth $1 US. But USDC is the second largest project, and these have come a very long way, very far. I don't generally hold stable coins, and I haven't, since they arrived on the scene in 2017, not for more than a few minutes, really. I don't want them because there is a lot of risk involved, and there's no upside potential, meaning you get all of the risk of a cryptocurrency, but no potential for reward. So for me, until now, it hasn't really done it. But what's happening now, we see increasingly, are that platforms are able to offer a yield on a stable coin. And there are some platforms that just to lend if you're holding US dollar stable coins, you can lend them to the market, and the market will give you the market rate for them, not the federal government manipulated rate, but the actual market rate of what people are willing to pay you in order to borrow that money from you. And oftentimes that rate can be 8 or 10%, like the good old days when I got into investing in the 1980s. That's what the bank paid you, because that's what the market was willing to offer. It was 8 or 10% when you lock up your money in a CD savings account. And now the market is doing that. The free market is doing that through these cryptocurrencies. So we believe that this is the future of finance. It's not quite there. It's not, Justin, to be clear. I mean, there's hacks, there's smart contracts, there's bugs, there's, and these bugs often, there was one just the other day that gave out hundreds of millions of dollars by mistake, just through a faulty code. And the protocol was able to absorb it, and it's one of the biggest DeFi protocols out there, and they're worth billions. But it just attests to the fact that these things are not extremely safe, certainly not a viable alternative to the bonds at the moment. The peg could break, for example, if one stable coin is not worth a dollar anymore. That is obviously a huge risk. So there are ways that to mitigate those risks, first of all. But as we continue down the line, we're testing those models, and every time a hack happens or every time a bug in the code happens, the protocol itself gets stronger, and they learn from their mistakes, and we move forward. And within the next 5 years, hedge fund managers will be making a decision. Do we invest in a DeFi protocol, or do we lend our money to Uncle Sam? And I bet you, when faced with a difference of 1.5% to 8%, I can tell you which one the money manager is going to take.
In speaking with people managing significant amounts of money, they don't really see the payoff at this point of DeFi, for instance. Their return, generally speaking, isn't worth the risk to them. And then furthermore, it seems when they speak to a lot of people in this industry, they don't feel like they're getting straight answers about it. So then somebody comes along and says, well, we're still literally the wild, wild west in much of this industry. And then it goes back to risk for them. Well, who can I trust? What are your thoughts on that? And what do you say to somebody who perhaps is managing $1 billion plus looking at DeFi?
We're not there yet. We're not, it's not there yet. I would say that you want to, at this point, you should be experimenting with money that you can afford to write off, meaning that money that your investors won't come after you for. But within the next 2 years, I believe that a money manager should be thinking about allocating 1%, 2%, or even 5% of their total portfolio to it. And to answer your question more directly, who do you trust, right? Who do you put more trust in? A government or a computer program that does what it's designed to do every single time, right? You can see the computer program. It's clear as day. You can see the coding. You can have somebody, maybe if you're a money manager and you're not a coder, you can hire somebody to do the coding and say, okay, this is exactly what the protocol is designed to do, and this is how it will execute flawlessly every single time. And at that point, you're not trusting, a human government changes every 4 to 8 years, and has incentivizes politicians to take out loans that they'll never need to pay back because they won't be there by the time that debt is recalled. You're trusting computer program algorithm that is designed to last hundreds of years. And I think that the choice is going to be very clear.
Any other notes for billionaires looking at these markets? Like, for instance, Bitcoin, there's already big money going into that. would you add Ethereum to that list? Can Ethereum shoulder what people are trying to build on it, namely with the upgrades in ETH2, which is essentially a new deployment of Ethereum?
I think that well, I mean, Ethereum has plenty of benefits and plenty of flaws, and inadvertently, I was kind of witnessed the creation of Ethereum while I was at eToro. I suppose this is a story for another time. But these days, the problem with Ethereum is one of scalability. And if you think about it, like building a building, for example, right? You need to first, before you build the building, you need to dig down and you need to build a foundation, right? Now, if you've built that building and now the building is full, right? There's a limit to how many stories you could add to the top without making it extremely dangerous to everybody, right? And this is in a nutshell, the problem that Ethereum is facing right now is that the building is full, and every time they add another story on top, so what's actually needed is to build another building right next to it and make that one dig deeper down, build a bigger foundation and build a taller building, right? But the issue with decentralized programming in general is that you can't just tear it down and build it. It's not a Microsoft Windows program, right? Microsoft Windows has the luxury of being able to say, okay, we want to create Windows 10. It's not connected to Windows. All of the Windows that were before it, we actually are going to create something absolutely new, start coding from the beginning, and create a Windows 10, and then we're going to push it out to the users. Now, in decentralized programming, things are a bit more complex. First of all, you need the general consensus of the entire network before implementing any kind of coding changes. And you're not able to erase what was before, because then you invalidate it, right? If you have a transaction that took place in 2015, that transaction still needs to exist in the records and on the blockchain. The way the blockchain and cryptocurrencies work is that each block is connected directly to the previous block. So you can make the blocks bigger or whatever. There's a limit to how much you can scale the network in this fashion. And this is why other protocols, for example, Solana is a very popular one lately, Cardano, not to pick winners, but we've seen dozens already try and fail to replace Ethereum, where Ethereum is obviously the biggest building in the neighborhood, and they're building these kind of patches to make it a bit more scalable, but it's never going to be the same as like kind of tearing it down and building again. So what's going to end up happening, I'm going to tell you the future here, is that there are going to be other protocols that come and say, okay, we're not building an alternative to Ethereum, but we're building something next to Ethereum that kind of feeds back into it, right? So that we'll have something that you can use Ethereum on, but it's going to make more sense for you to use a cheaper one that's next to it, or rent the space. You don't have to rent the space in the main building, but you can rent the space in the adjacent building that has kind of a walkway or a bridge that goes back and forth into the main building. And I think that's really what's going to happen is it will not be one protocol to rule them all, but rather many different protocols that are kind of talking to each other and being interoperable. And that's kind of, as I see, the decentralized solution to all of this.
And to extend on your architectural analogy, that you can see in buildings, old buildings, that sometimes they are added on in exactly the same way that you've described, an old building with a walkway that leads to a newer section and they are connected. So what about DeFi on Bitcoin? Is that possible? Do you see that growing?
Yeah, we just actually advise on a project called Sovereign, which is basically building just that, DeFi on Bitcoin, where you can actually hold your Bitcoin keys and reap a yield on your Bitcoin without them ever leaving your wallet. I think that that's certainly one way to go. As a hardcore investor myself, it wasn't particularly exciting to me because there are other ways of gaining yield in the market. And I'm not, I'm more blockchain agnostic, as they say. So I want to say, show me how it works and what the value is. But certainly there are those projects, and there will be people who are interested and moving towards them, certainly.
Can you tell us more about what you're working on at Quantum Economics?
Sure. So, I mean, we at Quantum Economics provide a very wide range of financial services, which are generally in three main categories, which is research, advisory, and money management. We've collected some of the brightest minds within the crypto space, people who have been from the beginning in blockchain and are themselves thought leaders and social influencers. And each person that we bring on the team has a very unique set of knowledge, unique geographic location, and a specific niche within the crypto market. Like when I got into crypto in 2013, I mean, it was really enough that I was able to, analyze the stock market and then do Bitcoin on the side, right? Like it's another asset that I'm analyzing. At this point, the market has grown so diversified in utility and in functionality and in the way that the space is evolving, that we really need dedicated people to look at, DeFi, and dedicated people to look at, NFTs, and now GameFi and play to earn are huge. As well, we have different spin-off companies, for example, Quantum Expeditions, which is building a mining operation in Texas for crypto mining, and Quantum Equity, which we've actually just getting started right now, building a kind of platform for institutional investors to invest in the DeFi market in a safe and sustainable way.
How about some of the projects that you're advising?
Yeah, sure. So at the moment, the ones that we're advising publicly are Lunar Crush, Electronium, and Luno Global. We've previously advised as well on Chili's and 1inch. We start with Lunar Crush because that's, I think, one of the most exciting is a website that analyzes the different coins. I think we discussed it a bit earlier, but they've also launched their own token just recently, where in order to gain the full functionality of the platform and analyze the cryptocurrencies, you need to hold 30 tokens within your Lunar Crush wallet. So it's basically, instead of them saying, okay, we need to monetize now, right? We're providing this information. Rather than saying, okay, we need a subscription fee, which would be awfully uninclusive, or selling people's data, which they could technically do, but that would be, then how could we criticize Mark Zuckerberg, honestly? So we didn't want to do that. So this is actually a unique solution where we could take a cryptocurrency, which is decentralized in nature, running on the Zilliqa blockchain, and allow people full functionality. And not only that, whoever is using the website, and by using the website and sharing data that you found and graphs from the website, you're actually earning Lunar tokens. So people are actually earning money just by using their data, which puts it squarely into the play to earn category.
We've had the honor and privilege here at StockPulse.com's Inside the Markets to be sitting down with Mati Greenspan today. Mati, can you tell us where people can find your work?
Sure. quantumeconomics.io. Sign up for the newsletter I'm writing every day. You can also reply directly to get me there. Twitter, obviously, I'm a big troll and I like to have fun there and share my thoughts. We also do audio conversations on Twitter through the Twitter Spaces, which is like the Twitter version of Clubhouse, and on LinkedIn, of course.
Just gave me an idea for like an angry Twitter account based only on price action. So just angry price analysis on Twitter would probably actually do quite well.
I would follow that.
Thank you so much, Mati, for joining us today. And thank you everyone for listening.
Good to see you.